Hey YouTube, this is the March 2020 update for the Project 1 million portfolio. Wow, the last week of February saw a lot of volatility in the market. I'm already thinking of names, the Black Blue Week perhaps. Anyway, we have been busy buying more stocks for our portfolio and we've also been selling some put option. Let's get into it. So this is how our portfolio currently looks like. We have the stock names here and we have the portfolio allocation here. We have the total market value here and the year-to-date profit or loss on that position over here. So let's run through quickly some of our positions. So Amazon is still our top position at about 18% and for a value of 32,000. Google is a close second. We have about 16% of Google shares in our portfolio. And Facebook is a close third with about 14% of the portfolio. So together, these top three stocks make up about 48% of the portfolio. Visa is about 8%. Alibaba is about 7%. We actually had the opportunity to buy more Alibaba shares during February, and we'll take a look at the stocks we bought in a bit more detail when we look at the history over the last 30 days. Booking is about 6%. Booking has taken quite a beating due to the fears of the coronavirus. You can see that it's currently at a big loss. But as is my style, I don't sell shares. But neither am I going to buy any booking shares even at this depressed price. I think booking still has some growth left in it. It still plays the long-term secular trend of travel, online travel. So I don't plan to sell the shares. We also had chance to buy Intuitive Surgical shares during Feb, and we also bought MasterCard shares. So Intuitive stands at about 5% of the portfolio and MasterCard stands at about 5%. So as I mentioned, I think in my last update, I still want to bring up the percentage of Intuitive Surgical and MasterCard in the portfolio. So if the market goes down further, I will likely be buying more of these two companies. So I think in total, the top or the core positions in the portfolio make up about 79% of the portfolio. So the portfolio will rise or lose money based on these top holdings. I've highlighted this position, which is basically an index position, as showing the positions that are the core holdings, which are above it, and the positions below it, which are not yet core holdings, which may or may not become core holdings in the future, depending on the business prospects, my research into the particular stocks, and of course the price as well. So if you're interested in knowing what are the other positions in the portfolio, you can take a look. We bought actually some more Boeing as well during the month, and it's about 2%. These are some of the other stocks: Apple, Costco, Nike, Comcast, S&P Global, JD.com, Expedia, Tower, Upwork, and so on. We actually bought some new positions as well. MSCI. MSCI is a leader in providing index funds, or rather it provides the grouping of various types of index funds. I'm sure you've probably heard of the MSCI World ETF. So they are used a lot in the grouping of different kinds of ETF products, and they are the leader, and they have very big fat operating margins, which show they have very little competition. S&P Global is one of their competitors, and they are behind the famous S&P 500 index. But MSCI also leads in this space, and it has a lot of global ETFs using its name. And I'm quite bullish on the trend towards passive investing through ETFs. So that's why I decided to pick up some MSCI shares. Right now, it's still a very small position. It's just 1%. But if I feel that the price comes down more, or I'm more bullish about the stock based on my research, I might pick up more shares. We also had a chance to buy some Microsoft shares finally, and so that just makes up 1% of the portfolio. Microsoft, I like it because it's a number 2 cloud player. And then of course you have Office productivity suite, and it's a leading software company in general, and also it has this gaming component to it, and I think that will also go up, especially towards the end of the year when I think the new Xbox comes out. What I don't like about Microsoft and why it was not part of the portfolio earlier was because it's a dividend stock, and I generally don't like dividend stocks because it's very inefficient. I want my companies to reinvest their cash flows as much as possible and to gain higher rates of returns on those reinvested cash flows. So that's why I was a little hesitant to pick up Microsoft shares in the past. But with the big fall in stock prices, I thought I'll pick up some Microsoft shares. The other reason I pick up some of these companies is so that I become more interested in researching them even further. If I have no position in a particular stock, that makes it a bit difficult to research that company because I may not be that interested in researching that company. So I pick up some minor positions here and there so that I become more vested basically in that company, and so I become more interested in doing more research on that company as well. So we also picked up some PayPal shares. PayPal is probably a company that I would like to add on even further, and I hope we get the opportunity to do that. I also picked up some Triple Q shares, which is basically the NASDAQ 100 ETF. I also picked up some Twilio shares as well. Twilio is an interesting company. It's a leader in the communication platform as a service sector. I'm still doing more research into it, but I like what I see so far. I like the CEO, Jeff Lawson. I like the growth prospects. It has a very good revenue run rate. And I think it's also, and most importantly, I mean, whenever I buy a stock, the number one factor really is the moat, right? What's the economic moat of that company? And I think as more companies use Twilio, firstly, they become more used to its product, and so it becomes more ingrained in their systems. And secondly, I think as more companies use Twilio, it becomes an even stronger product because of the algorithm and the machine learning becoming smarter, basically. And that makes it a more compelling proposition. Something sort of like Google search engine, right? As more people type in their search queries, the Google search engine becomes smarter. The algorithm and the machine learning becomes smarter, basically. So Twilio has some aspects of that from what I have read so far, and so it's an interesting prospect. And I was looking to pick up more shares in promising smaller startups with good revenue run rates. Upwork is one of those as well, and so I've also decided to pick up some Twilio shares. So we also have FedEx at 1%. There's some company that probably will not be buying more shares of at all. I probably won't buy more shares of Comcast, Expedia, Berkshire. I probably will not buy more shares of. Even if I do think Berkshire Hathaway is a bit undervalued, it does not fit into my kind of profile for the portfolio that I'm trying to set up, which is based more on growth as a reasonable cost, and strong companies riding good secular tailwinds. So I'm losing a bit of confidence in FedEx, and I probably will not be adding more to my FedEx position, because I think, first of all, Amazon is becoming a strong logistics player as well. So the moat of FedEx may not be as strong as it once was. And finally, we have some cash at about $2,579, and we have a total portfolio value of about $173,444. So overall, year to date, the portfolio is down minus 2.67%. If you're interested to know how I do this calculation, basically the formula is right here. So instead of using month here, I use year. So that is how this is calculated as of the beginning of March. Let's take a look at what exactly happened for the portfolio in March. So didn't really do anything for much of the beginning of Feb, except we sold a put on the 10th of Feb here. We collected $75 for this put. I'm still selling puts on Upwork. I know I had one put option that was assigned to me, but I'm still bullish on Upwork on the long term. And I think in the fourth quarter, it actually did decently. I think it managed to clock 20% or near 20% revenue growth rate for the fourth quarter and also for the full year. And I think their goal is to maintain that for the next few years. So let's see if they can do that, and be holding on to my shares. So I got this dividend from Apple, got this dividend from Costco, and then around 24th of Feb is where the excitement started to begin. So I bought 9 shares of Trilio, then I bought 4 shares of MICI, and then I think 26 is where the crisis deepened, and then I bought more shares of PayPal, about 10. So I bought for the first time actually 10 shares of PayPal. As the crisis deepened, I thought I would sell a put option on Carnival Corporation. So Carnival Corporation is one of the largest cruise companies out there. This is stock I think Jeremy from the Financial Education is also quite bullish on. So in a nod to him as well, I decided to. I didn't want to actually buy the shares themselves. I thought I'll sell a put option instead. As it turns out, it seems I sold the put option a little too early. I could have collected almost double the amount here, based on what the current market price is. But that's the way it is. I also bought more Mastercard shares. I bought more Intuitive Surgical. This actually was a bit of an error. I thought I had not put this working order in, so I got to be more careful about that in future. I should have put this working order at a much lower price, maybe 520 or something like that, and it would have been executed. Instead, I bought it at 550. So there was a bit of a human error involved there. Anyway, I bought more Microsoft shares. I bought 7 more Microsoft shares. I bought some Boeing shares. And then I think Mastercard particularly fell a little stronger than some of the other stocks because there was a change in the CEO. And to me, I don't think that's a big factor. I mean, it's more important to invest in a good business than a good manager. And I think the business is still as strong as it has been. So I don't see any long-term implications of the CEO transition. So I bought more shares of Mastercard. Then I sold more another put option on Upwork, and I collected 275. So selling all these put options have actually mitigated the decline or the percentage decline of the portfolio, but it does come with risk, and I'll talk about the risk shortly as well. I bought 5 shares of the Triple Q index. and I sold a put on Under Armour here, and I sold a put on Wayfair. Wayfair was a bit surprising for me. I didn't think this put option would get executed, but it did. Um, Wayfair is a leading online uh, commerce player for home goods. Basically, it's like the Amazon of furniture and other home goods. And so I think, I don't think it's going to be destroyed by Amazon, because Amazon focuses more on some of the smaller products. They could move into that space, but I think Wayfair has established a strong presence within that category. So they fell hard after their recent earnings. They fell about 20%, and that's why this put option got executed. But it does come with risk. I'm selling 100 put option for 100 shares, so I would need to buy 4,500 worth of Wayfair shares if the strike price hits below 45. But for my efforts, I did collect $720. So I did mention there are some risks towards selling those option contracts. So in totality, these are all the open option contracts I have right now. They are valued at about $4,110. So this basically means that if I were to buy back all these option contracts today, I would need to pay $4,110. And I'm a little over leveraged, because if you remember from the Excel sheet I showed, my cash is only about $2,579 at the moment. So I don't have the cash basically to buy back all these put options. But I'm planning to add in another 2,500 at least to the account over the next few days. So I'll bring up my cash to about 5,000. So I should be able to cover this. Of course, this market value of these put options could go much higher. They could go 6,000, 7,000, 8,000 if the market continues to fall, and these companies in particular continue to fall. But in general, these are all companies I want to own. Upwork is a company I want to own. Wayfair, I'm still doing more research about it, but generally, I feel I'm okay with owning $4,500 worth of shares if it comes to that. Also for trip.com, at this price, $25, I'm probably be okay with owning $2,500 worth of trip.com shares. Even carnival.com, sorry, not .com, Carnival Corporation, I will have to buy $3,250 worth of shares. And right now, actually, the strike price is around here. So, and you can see that the market value of this is about $625, whereas I got only premium of $385. So I was probably way too early on this. But I still think that Carnival has been beaten down a lot because of the fears of the coronavirus, and it probably could go up another 5-10% once those fears subside. And so then this would not be a very risky put option. And Baozun, I'm quite bullish on for the long term. Is the so-called Shopify of China, so I don't mind owning those shares. In total, I calculated that if there was a doomsday scenario, markets fell by 5-10% more or so on, and then maybe these companies fell below their strike prices significantly, and meaning those put options would get assigned. I would need about $24,000 to buy all those shares stated here. So, and my cash is only going to be about 5,000 soon. So I am over leveraging myself a little, but that was actually quite deliberate. I wanted to add a bit more leverage into this portfolio. I did not want to borrow money because I didn't like that kind of leverage. I wanted to sell more put options, get premium, and use that premium to buy more high quality stocks. that was the kind of leverage that I'm a bit more comfortable in. There is a downside to that, like I mentioned. If the market really collapses, and these companies in particular collapse, I will be on the hook for about at least $24,000, and so I'll need to cobble up that money and make sure I have enough money to buy up those companies if that happens. What I try to do is I try to monitor the market value of the put options. So, and I try to keep my cash value at or around near the market value of those put options. That's just how I try to limit the risk on that. So every month I compare my portfolio performance against the best ETFs and the best funds out there. So I compare against the S&P 500, the Dow Jones, the Nasdaq, VJT, which is a technology ETF, IGM, also a technology ETF, and a fund called Berkshire Focus. So let's take a look at how we have performed compared to these funds. So the Dow is down 11%, almost 12%. The S&P 500 is down about 8.81%, and the Nasdaq, the VJT ETF, and the IGM ETF are down about 4.78%, thereabouts. And Berkshire Focus actually is still doing well. It's done about 3.67% year to date. So I think this is probably the first time that we are beating all the ETFs. We are down about minus 2.67%, as I mentioned. We're still losing to Berkshire Focus Fund though for the year, but we are beating the ETFs. One caveat though is that we are using a little leverage, as I mentioned, in terms of selling those put options. So that is one part of the equation in terms of how we have managed to beat the ETFs so far this year. Let's take a look at how our friend Terry Smith is doing as well. So this is Fundsmith. Let's take a look at Fundsmith's performance year to date. So Fundsmith has done about minus 4.36% so far this year. So we are beating Fundsmith as well. So generally, I think I'm pleased with the performance of the portfolio so far, and I will definitely be picking up more shares if the market continues to tumble. I will be depositing more cash as well. One worrisome factor is if all those put options get assigned, but I don't think that is too likely. I probably will not sell as many put options going forward, and I plan to also keep some cash outside the account, but as a reserve in case I do need to buy those assigned shares. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the eToro platform, and you like the ability to copy good investors, I suggest you join the eToro platform. You can use my link in the description tab, and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video.